Okay, I'm not on mute now. Sweet Bobby is here. Hello, hello. Check, 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 check. Sweet Bobby here. I'm a little sweet and sour today because I have been picking up my dead chicken outside. The rooster that I paid $50 for had to travel to freaking Cedartown, Georgia to get him. And he didn't know he was little. He's a little bitty silky rooster. And he got in there with the pigs. And apparently they trampled him because he would get in the feed trough with them. And he didn't know he was little. And apparently, took him down $50, and I can't count it off my taxes because the stinking Department of Revenue here in the state of Georgia says that I'm not a farmer. Unbelievable. And I ain't got nothing but farm animals out there. I got the goats, I got the ducks, I got the chickens, I got the hogs, I got everything, and a dead chicken that they won't let me count off my taxes. But it's not the monetary thing. I just hate that my little animals die, and y'all know I'm always burying something. So I'm gonna take him off to the dump here in a little bit. I put him in an old feed sack, and we will carry him off before the flies start coming around. But that's just my life. That's what I do in between trading, y'all. That's what I do in between trading. Looky here, the market was down when I was at the gym a while ago, and now we are up sizably. What happened? Who resigned? Did somebody resign? Everybody was telling me yesterday, oh my gosh, they kicked the Speaker of the House out. It's going to be a bloodbath. And I got on there and I looked at the futures last night and I go, some darn bloodbath that was. It didn't really bloodbath nothing. This might be a head fake though, y'all. Don't buy it. I mean, don't buy that this is over because we saw increased volume. That means increased participation to the downside. That's what we saw. And if we go over here to our chart, you will see that really it's a nothing burger day. It may be at 0.52, but it is right at the opening 15-minute range, and it's hovering around the overnight high from last night. We're above VWAP. We're above the hourly midband. VIX has gone down. That should help our position some today, getting some of our temporary losses back in order. AD is 116 and traveling up, baby. Traveling up. But look at the volume. People are coming out of the woodworks to finally trade. We've got volume of 7,842 every 2 minutes on the E-minis. So people are participating. Now, I know those of you that say, Bobby, the Force was not really a thing in Star Wars. Yes, it was. A lot of people made fun of the Force. You don't make fun of the big green monster, y'all. The big green monster identifies oversold, overbought conditions. It also provides support and resistance. I drew this back on the 1st of the month, or the 2nd, I guess. We drew it on Monday, and it's already playing out in 30-minute time frame. This is an area of support and resistance. The 50% line is an area of support and resistance. Right now, it is serving as support, and we're trying to squeak back up to the point of control. Remember, the market does not like, nature itself does not like these little black hole area, vacuum areas, right? Nature doesn't like those, and so what it does is it tries to fill those areas where we have gapped. Now, the problem is we also have a gap down here. So we expect over the coming 10 days, we expect the market to kind of do this, right? So anything in here, we're not really surprised about. But you will see a lot of inflection right here at the 42.64. Why? I don't know. I'm just telling you what we do. And and those of you that have been here for a long time, you have seen the power of the big green monster. Those of you that's like, oh, whatever, I'm not going to pay attention to that. Do it at your own peril because the darn thing works for some reason, and I'm not sure why. And I don't really care why. You know, it's like I don't know why I like Big Macs. I really don't. And I can remember when I was a little kid, we went camping, and there was some guy that lived in a tent that told me that McDonald's put worms in their hamburgers to make the meat go farther. And I couldn't eat them for about 5 years. But finally, I was convinced that worms were not in the McDonald's hamburgers, and I went back to the Big Mac. I don't know why I like them. I don't care how they make them. I don't care if there's worms in them. They're good. And I like me one with a little bit of extra mac sauce with a little bit of light lettuce. I don't want a lot of lettuce in it. So who cares how this is made? It just works, and it works time and time and time again. So we are fairly priced. Don't let anyone say that we're oversold. We're not oversold. We are fairly priced. Now, linear regression, what is it saying? I'm thinking linear regression is turning over, y'all. I really do. It's really flattened out a lot, but we'll see. we would expect some type of little reversion in here, but it could continue to go down. This was a big, big meatball, y'all. Look at this big meatball. What's this? Do you see this meatball here? Okay, you see that? But you didn't see really volume going up, right? You don't see that. You see volume. I mean, there was a day or two that it was up, but volume was kind of flat. Watch what we saw during this move. This move was almost entirely up. Do you see that? So this move has more force in between it. Now, there's going to be a pullback at some point, but I believe, ladies and gentlemen, that based on the amount of participants in this market, that there will be a continuation at some point to the downside. Get ready. Hedges ready. All right. So that's just my opinion. Does it matter? It really doesn't. And nobody really cares. Well, look at this. This is a horrible looking little thing here. Look at this. I only got an 80% probability of success here, of making some money. So what are we going to do? I don't know, Bob. Let's check it out. So now here's the thing. This is going to look really ugly because remember, I have not had the time because I've been dealing with dead chickens and, going to the gym and going to my toe doctor this morning. So we've not updated. I can't save it. So we've not saved anything since the 22nd. So really, I'm not even going to go in and do my net lick and all on this until I get this stupid spreadsheet fixed. Rick said he had the same problem, and you may have had the same problem. And the best way to do it when it won't automatically save is just to go into a blank spreadsheet, copy your blue columns down, and hopefully I'll have that by tomorrow. If I'm not working on my book that's taken so long on chapter 11 because it's real estate, and I used to be a big into flipping and rental properties and all that kind of stuff. I used to do that, and I've got so many tips for my readers. I just never will finish chapter 11. All right, so what are we going to do with this account? Let's see how we're doing today. Now, this was kind of cool when I looked at it a while ago. Oh, my gosh, I just logged into the stupid thing. Unbelievable. Oh, happy day. All right, so let's go. Am I in the right account? Yeah. So what the devil is this? Oh, is that my 200 moving average? Yeah. So we are, let's see, that one is close to the 200 moving average. That's on SPY. Let's go to the E-Minties. E-Minties. The E-Minties. Well, where's my darn 200 moving average on this? Where the flip is it? Anyway, so what do? Let's see, trade our positions. Let's see. So we are up P&L. Oh, look at this, y'all. Are we only up $940 on the year? I don't think that's right, but it says we're up $786 on the day, which is really kind of cool. Am I going to do anything? 2 of 17, 127? I don't think so. Got $3,900 of extrinsic value. No, I'm at 61% on my bond, but I don't think there's anything to do. This is where I made a mistake in March. Y'all, this is the same freaking thing that's happened back in March. Remember when March come and I started putting futures positions on, doing all this? Forget it. Just let your positions work, y'all. Let the probabilities play out. Don't overmanage it like I did there. So I'm trying to be a better trader now. I'm trying to say, you know what? Screw it. I'm just going to sit here and let my probabilities do what my probabilities need to do. So let's close this up since I can't save it. Bunch of communist Microsoft people. I'm spitting all over the place. Unbelievable. All right. So let's see how we're doing on our net lick here. We hadn't traded it since the 10. 10, what's the date? It's the 4/2023. Are we up? Are we down? I bet we're down. I don't know. Don't be pessimistic, Bob. Be optimistic. Let's see what we're doing today. Net lick is 24,796. 24,796. Praise the Lord. 24,796. Fire up the band, Rico. Yes, thank you, Jesus. All right, so let's see what we're doing here. And I'm like the only person in my church that's not a deacon. If you're a man in my church, I mean, if you stand still long enough, they'll make you a deacon. And I'm like the only one that's not. And I'm like, I wonder why. All right, 53.19. 53. That is weak on my data, y'all. 53.19. Let's put that in. That don't sound good at all. 53.19. And what was fixed? Was it 18 or 17? It doesn't really matter. So I mean, come on, y'all. I am low. Low, how low can you go? 14, say 14.8 in buying power. About where we were before. I don't like that. I don't like being at 60% buying power with my little stuff like that. So let's see what my trade thing says here. Okay. It doesn't say close anything. Doesn't say close anything at all. So let's see my open positions. Just kind of go through and see what we got here. Don't have a ton of positions on really. So let's go to this. Let's see how we're doing compared to the market. I told y'all we were going to catch them. I told you that we, ladies and gentlemen, when everyone is a deacon, that know what is. That's right. I mean, I just sit there and say, well, like when we have a new deacon orientation, I look at it, they have all the deacons come up, and I go, me and Beth are the only people sitting in the audience. I'm like, how are we not? I mean, how come, it looks at some point, it looks like they'd say, there's Dr. Bobby Gaines. Look at him. He's, no. I think they know about my mental health status. I think. Did I read a book? Yes, I did read a book about positive mindset. What was it? I can't even remember what it was. All right, so everybody's doing good. All right, so look at this, y'all. I told y'all we were going to catch the market. So the market's up 10.28%. We're at 9.73%. We have 9 naked positions, and this is what we like, right? We have 12 put debit spread positions. So 9 1-1-2s or 1-2-1s and of the naked puts, and we've got 12 put debit spreads, which is really, really nice. So why don't we do like we did yesterday? Now, I told y'all, and James, you're here today. Let me ask James a question. James, I had it in my trading plan, something about what y'all were doing. You're putting them on about 120 days. Stacy said yesterday that they become 90 to 95% profitable with about 30 days left. So after 90 days. Now, James, do I remember, did you close your nakeds when they're at 30 days, or do you wait till they're like 90 or 95% profitable?
Bobby, I closed mine at 30 days at that time. But I wouldn't do that in this market because it's going down. So I would leave them on.
You would leave your naked position on?
I would leave the nakeds on because they're not deteriorating in value for the last month or so.
Mm-hmm.
I have some that have been on for 2 months, and they are at about 45%.
Yep.
So I looked at those today, but it's just my determination that while I could close those and put another one on at 119 days, I've just decided not to do that and leave it on there until we hopefully make a move in the other direction.
Yeah, got you. Okay, James, thanks for that. Because I saw in my trading plan that I had put it in there, and I think I pulled it out now. But I definitely made changes in my trading plan based on what you guys said the other day. And if anybody wants this, I uploaded this current trading plan. It's in the description under my YouTube videos. So all you got to do is go there and type in your email address, and you can get the trading plan that I have. Okay, and to me, it's working extraordinarily well the way it was. But I am going to sprinkle in with the 1-2-1s. I am going to sprinkle in the 1-1-2s. You guys have shown me that, and again, my positions are perfectly safe. Let's see them. But you guys, I like that y'all didn't have as much of a drawdown that I've had over this little time period. Let's look at our nakeds here. The option position or the option deltas. Yeah, this was good. Remember when they were 29 the other day? Now with this move up today, they're only at 22. So I've not had to roll anything. So I've not, and that's the good thing. Even though we had a drawdown, and let's see what it looked like. We were at, well, where's our thing at? We were at, yeah, we were up, what, 14%, right? That's probably the highest that we got just a few days ago on the 18th. So now we're down, to 9.73. You guys did not have that type of a drawdown. It's not a huge drawdown, but still, it's, that's probably more than I want to do. Now, again, all my positions are safe. They're absolutely safe. but I just didn't like the drawdown of that. So that's why I am going to sprinkle in the 112s like you guys are doing the long term. No, Matt, he's not closing after they've been open for 30 days. He's closing them after they've been open for 90 days and with 30 days left. And correct me if I'm wrong on that, James, but I think that's what James is doing. Even though he said he's not really doing that in this particular market. So, the 90 to 95%, and it goes back, and I mentioned this yesterday. Remember when I said this a long time ago? I said, I really think that you can take these things to expiration because of the hedge that we have. That may be the optimal thing to do. But if you want to take off a little risk with, 90, 95% profit, I think that's good too. All right, so why don't we put on a trade? You wanna? So let's do it here. Just looking to make sure y'all ain't got any questions or saying anything. All right, so what are we going to do, Bob? It's a good question, Bob. The man who's got to take off a dead chicken to the dump, and they don't like you dumping dead animals in the dump either. So I have to make sure he's kind of disclosed in a trash bag so that they don't go, excuse me, you can't be dumping your dead chickens in the damn garbage. And I'm like, excuse me. Anyway, I'm sorry, I'm jazzed up on Adderall today. All right, so what are we doing? So, this is what Stacy and James were sharing with us, and I really like it. They're going closest to about 120 days. So the closest to 120 days would be 107. Now, they're doing it more, I think, as a certain amount of time, right? Now, Stacy's like, she's going to wait 15 more days before she puts hers in, and I think put it in exactly on 120 or as close to 120 as she can. So she's more doing the scheduling of trades, which is good too. I do it more based on my theta's low, so I need something now. And what they were doing is selling a 5 delta, right? And I go by probability of being in the money, 5%. So my closest one there is the 3,400. So 3,400, see if we can get 1,450 for them. Sell 2 of those. Bingo, Bob. And then in the same expiration, going to about a 25 delta. So we're saying about the 40-50 here. So buying the 40-50 and doing a 50 wide. Yep, 875. So let's see if we can get it filled for $9. Bingo, Bob. All right, so let's put that in our pipe and smoke it. Can I take in the money, put these spreads to expiration? Aren't they going to assign MES futures for my short? Very good question, Ovi. Listen to this. This is important, okay? Check with your broker. If one leg is in the money, which would be your long one, then what would happen is you would wake up short a future. And they would charge you the $15 or whatever it is, for you to for that to happen, exercise and assignment fees. If both your long and your short of your put debit spread is in the money, then you would be long a future for the long put. No, you'd be short a future for the long put. You'd be long a future for the short put. They would cancel out effectively. So you'd be buying a put, you'd be shorting a put, but your broker may still charge you exercise and assignment fees. So my thing is, I will take those off so that nothing expires in the money. But again, check with your broker. Okay. Yeah, you just want to make sure you don't have those fees. Or heck, you could say, close them a minute before the close on the day they expire at $49.50 to $49.75. I like that, Ed. Ed, I'd like to hear your voice again. It was good yesterday. Ed almost puddled up and cried.
Good morning. Good afternoon. I'm sorry, I'm Central Time.
Ed, you remember I used to get on here and make fun of you and pick at you and stuff. Ed, we don't get to do that anymore. You're just so in and out of us. I mean, I know you're busy. I mean, here's the thing, y'all. You could burn Baton Rouge, Louisiana on a wet day with all of Ed's money, especially now that he sold off his rental properties. I mean, this man is swimming, and he ain't got time for us. We understand, Ed. No big deal.
Don't be ridiculous. Don't be ridiculous.
Huh?
No, I'm happy to try. I just want to throw in that little thing, like instead of
Ed, were you in Saudi Arabia yesterday? I saw Mo's pictures on there. I thought, my God, Ed is he's done went to Dubai. Where in the crap was you
That's
at?
so funny. No, we were in New Orleans at the Sanger Theater.
Well, that was beautiful.
we were at the Louis Armstrong story. You know, he was born and raised in New Orleans. I didn't
Mhm.
like it. She didn't like it. It was not a great one.
Oh my gosh, Ed. See now, look, y'all, Ed is all cultured now. He's sophisticated.
Ah,
He's going to shows and Louis Armstrong stories. Anyway, Ed, I didn't mean to interrupt you. Go ahead.
no. I'm always happy with the mutual ribbing that goes on. So yeah, and pardon my barking dog in the background. If you can hear that, I'm sure everyone's
Oh,
like,
Ed, we don't
what
care.
is that crazy critter? So yeah, the put debit spread, like I've looked at this a lot. We've discussed it on and off over the years. It's really not, I think it's a best practice to take it off the day of expiration. If it's fully in the money, or even if it's partially in the money, like if you got a 50 wide and it's even 10 points in the money at the very last minute,
Mm-hmm.
it's going to max out at full value. You don't want to mess with all the other details. So, just put in the order for it to exit and get out of it, and don't worry. If you're assigned, if they exercise part A and don't exercise part B, you have some market risk over the weekend, because if they assign you, if you're short a put and they, well, if it's fully in the money, I guess they'd offset. But you understand what I'm saying? Even if they assign one piece of it, you have the over the weekend risk. So if the market opens up or down on Monday, whatever that position's profitability was Friday is going to either be better or worse, because now you're assigned the futures contract.
Mm-hmm.
Just get out of that little stinker. That's the easiest thing to do. And it's we talk about high class problems. This is a high class problem. How do I get out my fully maxed out put debit spread? I mean, think about it. That's about as good of a problem as we could have. So I say keep it simple and get out of it the day of expiration. The tricky part really is, when do you get out of it before then? Like, I have one right now. In fact, I think I posted what I did in my room. Yes, I did. So I entered another 111 in this is in my notional edge journey room, Bobby, in the Discord.
Yeah.
I entered another 111 this morning. I legged into it. It's diagonalized. If anyone's wondering what the heck a diagonalized 111 or 112 is, go last fall and search through and look through for something called the Turbo 112. We were doing the Turbo 112 for quite a while, where we diagonalize these things.
Yeah.
So there's some good material in the past. I can't tell you what date, but it was sometime in the fall, September, October, probably. And that'll explain this diagonalized thing I'm doing here to some extent. And then I also post my existing put debit spread, which has 16 days left to it. Right now, I'm up 1,350 out of 2,500, or out of $2,000.
Ed, you greedy
So,
bastard.
I'm just lucky. I had this tent this is part of an LT 112 campaign. And this is a leftover put debit spread. It's 4,400 to 4,350. Again, it's right there in the room. Anyone can go look at it now or later when they're listening to this. The trick is when to get out of that. I don't know, because the puts, the strikes are 4,400, 4,350, and we're at 4,291. So, I'm 60 points beyond the bottom of the trap. So it can go up to 4,400 at expiration. I'm still going to make full trap money. But if we get in a full-on rally in the next week or two, this thing could move out of the tent, and I end up with a $500 loss instead of this $1,300 profit. I'm going to all these details into the weeds to let people know none of us have exactly figured out how to manage these in the money put debit spread things, but there are certain things I know, like when they're super deep in the money. This one's pretty deep in the money. If the market was down at the lows of today, it was like 70 points beyond the short put, which is pretty deep in the money. And it's not attached to a naked put, so that is there to support the campaign, the overall portfolio. And the best thing I can figure out to do is get out of it when it hits something around 40 or 45 points, because it only has between 5 and 10 points of protection left to it. It only has 5 points is $250, 10 points is 500 in ES. And it's up, 1,500, 1,800, like, it's a lot to give back for not much more protection. Because remember, these are here for protection. These are here for drawdown. These are here for grind down protection. These are here to be shock absorbers in the account, shock absorber of this volatility. These in the money put debit spreads or close to in the money ones, or they really help cushion the blow if you're not super over levered. So I'll stop there, but go check on that if you want. It's tricky. Again, I usually, if they get to the 40 or 45 level, you should get out because there's just not a lot left to make on it, unless it's 200 points in the money, and you almost have no risk of it flying out of that trap. Because once it's like at 16 days, it throws out a lot of profit every day from here on. So I could get out of it 2 days from now if the market starts rallying a little bit, and probably get it what I can get now. So I'll stop. That's too much. But
And Ed,
that's
aren't
part of
you
the
a
life cycle of a put
aren't-
debit spread.
Aren't you also a proponent of what Stacy mentioned yesterday? I think I've heard you mention this before. Of you could close the long of the put debit spread and roll it down closer to the short to lock in some of those profits.
Yeah.
Hey, describe that to everybody so that everybody kind of understands what that is.
Well, let me see. I wish I was on my desktop and not on my phone. Basically, in that example, I would take the 43.50 and roll it up underneath the 4,400 strike. So I could roll it up here. Let me load this thing and see what it does. Roll strikes up. And oh my God, my dog is driving me crazy. Anyway, you roll it up and you effectively take out a lot of the profit by rolling it up. You basically, instead of having a 50 wide put debit spread, you end up with a 5 wide or a 10 wide put debit spread.
Now you said roll it up, but it's rolling down, isn't it?
Well, I'm rolling.
You roll your long position, right? Not your short position. Or
I roll the short one up underneath the long.
Oh, you rolled the short one up.
Yeah.
Got it.
So, I'm sorry, I'm trying to get to this silly thing.
So in other words, the short is like, you're like, hey man, this thing is at profit, so I'm gonna roll it up.
Yeah. Well, like right now, I'm up, whatever I'm up. Let's see what I'm up on this thing. I'm sorry for the pause. Yeah, I'm up like $1,300 on it. So I could basically take the 43.50 and look, it's in toss. If it were in think or swim, I mean, in tasty, it'd be easier to do. But let me just look at this thing real quick. Or not. Basically, I would take a lot of the $1,300 in profit and leave myself with a smaller remaining profit and still have a little bit of this hedge on. It's not going to do much. It's not going to profit that much more, but instead of just taking the whole thing off, I could just shrink the 50 down to a 5, a 10, a 20, or something like that, leave the put debit spread on in that form. And I've already harvested a huge amount of the profit. So it's kind of a compromise move if you're not sure what, when, or how.
Got it. So you're closing something and you're able to sell something closer to your long to take in more credit. That's what you're saying.
Yeah, I'm basically taking the short put and rolling it up and selling another short put underneath
Just
the long
closer to your
put,
long.
the long put of the put debit spread.
Yeah, I had it backwards. Then.
Yeah. And again, you're kind of gutting the put debit spread. You're basically partially taking it off.
Mm-hmm.
So it's not the end of the world. It's just you're removing its ability to further protect the account to a large extent, but you're also taking a huge part of the windfall off the table. It's a halfway move. It's a compromise between just removing it and leaving it on and hoping for the best.
Ovi's got a question. So should I good to cancel order all my put debit spreads at 49.5 to 49.75? I don't think I do a good to cancel order. I think I just watch them manually.
A lot of that depends on your account size. There's a lot of talk about if you enter trades and tasty as exit orders, it affects your metrics and da-da-da-da. And that could be true.
Mm-hmm.
I don't personally see a lot of movement in my account. And it could be I have a relatively low amount of leverage compared to many. And so I don't really notice it, or it's just a couple little ticks and it's no big deal. But like at Tasty, where that is notoriously famous, like if you enter an exit order, it screws up your metrics. I have sell orders on 6 of my 7 SPY puts, and they're not even close to being executed. I could take them all off right now, but it's easy for me to watch. I just click on the activity tab, look at working. I see what the current price is, and I see what my my target exit price is. And it's just an easy way to look at it. I don't care if it messes up my metrics a little bit. And at Thinkorswim, I do load when those put debit spreads get to be in the money, like this one, I have it loaded right now. I have a sell order at 41. And it's tracking at 34.25. So I can just look at my monitor activity and positions tab, and that thing's wiggling around in live time. I don't care if it's messing with my metrics. I want to be able to look at that quickly and easily. And that's the quickest and easiest way to look at it. So if we, when we were down earlier today, if we tick down 20 more points, this thing was at like 37. If it went to 41, I might get out of it without even looking and like, oh, well, I left 9 points on the table. It's $425, or $450, but I got, pushing almost 2,000 out of it. So, whatever. I don't want to say it's a fear greed thing. I don't hesitate to load up those, I'll call them active put debit spreads somewhere where they're highly visible and not just mixed in the plethora of other positions we have in the string of positions that we have. If they're not all grouped, or even if they are grouped, they still kind of mishmash together a lot of the time. Not at Thinkorswim, but at Tasty. So I like it showing me that. Okay, what else we got?
I think that's it. Sounds good.
Okay, what's the pros and cons of closing at 49.50? You have to wait until the last couple of minutes to get 49.50 or 49.75, because before then, like this one that I just described, it's 35 points. If you're kind of close and it's early in the morning, the market might move 50 points against your put debit spread, and it's worth a lot less. So that thing is not going to mark that high literally until the last a minute or two of the trading day, or few minutes, depending on the severity of how far it's in the tent. So, all right, that's all I got. Thanks, everyone.
Good stuff. Hey, guys, y'all have a wonderful rest of your day. We're learning a lot. This market is teaching us stuff. So y'all hang in there. Bye, y'all.